Shorting stocks and how you should get started actually doing so. Stock market once again is hitting all-time records just when it dropped to all-time low, and this was just recently. Now, the thing about this is that the economy itself is just bad. We have a total disconnect between the actual economy and the stock market, and that is not the first time this actually happened. By them printing unlimited money and doing so, they rescued the people who are in Wall Street. The people on Main Street are just being left behind. So pretty much ever since this started, the first time this happened was around when we had the financial crash of 2009. But this was even greater magnitude than 2009. What happened recently was the worst thing ever. Pretty much the whole economy went to a standstill. The stock market could have collapsed to almost nothing. And yet they start printing money like crazy, and there is no place for money to actually go. Which makes it the only place for you to go ahead and grow your investment is pretty much to gamble. In real estate, stock market, or Bitcoin. All those places are the only place where you can make money, a lot of money, very fast. And this is what a lot of people are doing right now. You can see right here, NASDAQ is at all-time high. If you look at the max, we haven't seen performance like this since the year 2000. In fact, it took almost 2 decades for this to topple that. And this happened around 2016. And now it only took a few years for this to go to all-time high, which is right now. This is the marking of an actual bubble. The best time to short stocks is when everybody is in, not when everybody is out. Pretty much now is the time to look for plays for you to play. There is a lot of plays for us to play right now. Not all of them are good. So the first one everybody is asking about is Bitcoin. Unfortunately, Bitcoin is one of those that is not easy for you to actually short. The reason why, that you can't actually buy the actual stock. You're not buying a Bitcoin stock. What you're buying is pretty much an index that has all the Bitcoins in it. Because of that, if you go to E-Trade, trying to short one of those is not really possible unless you short the actual using a very risky method. So I'm going to be showing you right now what I mean by this. So let's go ahead and try to short sell Bitcoin using the most riskiest method, which is short selling the actual stock. So short sell 10 shares at 32 in the market price. We got to enter a limit order, so it's not going to let me just go ahead and place a market order on this one. So let's go to limit and type this in 30.05. Press and preview the order, and it doesn't allow me to do this. And why is that? The reason why, there's something placed against this security that doesn't let me buy and sell this specific short sell. And in most cases, that's not going to actually happen. But in this specific case, it's not going to let me do it. But if it did, you can see here that it's going to cost me $315 to short sell this stock. My losses potentially, if I did open this position, would have been pretty much unlimited. Why is that? Well, let's say, for example, we're going to go into one, but it can only go down to 0. It can go up to any price. And because of that, short selling is very, very risky. On the other hand, if we do it with Tesla, let's go ahead and try this one. So short. This one is also, we're going to be doing the market. Now this one is going to allow me to do it. So what I was trying to prove here for you is pretty much why it is so hard for you to go ahead and bet against something like Bitcoin, although this is in a bubble. You can't short sell this easily, and therefore it's going to be just so much harder for you to make money shorting something known as Bitcoin. If you want to make money with Bitcoin, you just have to wait until it drops really low and get into it, and then just play the index. But short selling Bitcoin is not something that you can actually do, even if you can get into the actual trust itself. But one thing that is missing with Bitcoin, there is no option chain. With an option chain, I could take the less risky version of short selling. On the other hand, something like Tesla, I could potentially short sell Tesla and not risk getting my face ripped off. Instead of risking one share of $800, let's say Tesla goes up to 1,000 or like 2,000 or like 3,000 overnight. You're risking triple the amount of money that you put in Tesla. But who knows how high Tesla is going to get. So every single time you're going to be pressing on selling short Tesla, you're risking huge amount of money. Therefore, if I was going to short sell Tesla, I'm not going to do it like this. This is the riskiest way for you to do. Now let's go back before we go and talk about more about actually short selling. There is things that are so and look so juicy, like GME, for example. This one is GameStop. The chart is just off the wall. Tesla, the chart is off the wall as well. Most of the gains happened in the past few months. With GameStop, short selling here is a dream come true. Let's go ahead and check this one out. This is probably one of the best candidates to short sell I have ever seen. This company is not doing well. There is no reason whatsoever for this company to be here. Taking a look at the chart, this is truly a parabolic move. No reason for this to jump this high when this company is doing so bad. A parabolic chart is pretty much what happens is there is a lot of takeoff, like a rocket ship. And guess what happens? This thing drops to the ground super and extremely fast. Now, why this company is the perfect candidate for short selling? It's not even making money owning per share, it's actually losing cash. There is really no reason whatsoever for this company to go with a 52-week range of $3 all the way to a whooping $160. This is not a company you want to invest in. On the other hand, if you want to short sell this one, you also are risking the same exact thing. What you're risking here, how high this can potentially get. For example, I want to short sell 10 shares. I put a limit on this. It'll be 96.36. I'll place on preview the order, and look what it says. There is no way for me to borrow those shares. This is why this thing keeps on going up. Why is that? Because there is not enough shares for me to sell short. Every single share that's been on this has been already gotten. So how do you short sell something like this? People who have money have access to an ability to short sell the stock. They have ways to buy into this. Somehow, I don't know how you can actually get those things. But there is a way for you to do this. It's called the option block. So pretty much go GME and let's check if we can still short sell this company. Going into the options, and lo and behold, we have the whole thing here, the strike prices on this thing. This is not a healthy stock. Something wrong with it. Now, the question is, how fast is this going to drop? And when is it going to drop? That is the big question here. Obviously, the faster it goes up, the best time for you to buy is going to be then. But let's say, for example, we are playing this one in February 19th. So we're going to be short selling this specific stock using the option block, which is the safest way for you to gamble. You can lose 100% of your cash, but you can make 10 times more. So over here, press on sell. What we're going to be doing is pretty much buying and trading the actual calls and puts here. Press on trade on the bottom, going into the options block. And we are going to be buying an actual put. Buy to open, picking the expiration date, which is going to be February 19th. You want to go at least somehow in advance here. And the strike price right now is at 85, which is a put, meaning if it drops 85 and below, you're going to get all the money for it. Let's see the price for this one. I'm just putting market to find out. So the put for this one is a whooping expensive. $3,000 for one put. I'm risking, if this thing drops, I'm going to make probably $30,000, or I'm going to lose the whole $3,000. It's a huge gamble, but it is in the money gamble. If you want to actually play this and risk the littlest amount of money, what you can do is technically figure out, well, this thing is going to drop too. Let's say it's going to drop to $30. And you can see that this goes all the way to 250. That's affordable right there. But if this thing doesn't hit the target, which is 30 and below, you're going to lose all this money. This is a lottery ticket in terms of a trade. Not unusual, not unheard of, but it doesn't even have to get to the $30 mark here. That is not what I'm looking for. All it has to do, it has to get close to it. It just has to drop. And then the bid size is going to get bid up much higher. And when it does, you just sell it. You just close the actual buy open. You're going to be doing sell open, and you just closing it up and profiting. And that is the 100% way for you to get gains on something like this. It is a lot more tricky. It actually might and might not work, but it is so much more safer. And let's check out Tesla. Now, this is a whole different animal. It is a whole entire different beast here we are talking about. This stock can run up to 1,500. It can run up to 3,000. But if we think that this is the top for this one, if you're buying a put in the money, which is the stock price of 885, this is like a lot of money. One put for Tesla, weekly expiration, is a lot of money. But in a week, there's no way it's going to drop below 185. I mean, it might, but you're not going to make much or anything for that. You got to go a month in advance. You're going a month in advance. We're already talking about the double of this price. In the money, $7,000. This is why those stocks like Tesla never drop, because the people who own them make money betting against people who are betting against the actual company. This is how they make their cash. It's pretty much those options that people are buying and buying the wrong options, and they keep on losing. So with Tesla, you want to hit like a lottery strike. So pretty much what you're doing here is going down, trying to figure out a price that's going to drop to, let's say 500. Now, see, right now, I'm just gambling, trying to figure out what price would this actually drop to. For that, we gotta use the actual chart to try to figure out the drop in price. Like, what is the likelihood of this to drop to? The only way for us to figure this out is to look at the historical quotes, specifically the 1 year chart. So over here, probably will drop below 600 is some price that is possible for it to actually do. Anything over that is a plain lottery ticket. So $600 strike might be something that's going to happen in a month. And you can see it right here. This only cost us $355. And if you're right here, we're going to make a lot of money. If you're wrong, we're losing the entire bet of $355. But at least the losses are not unlimited. We're keeping our losses to a minimum. If you're just going to be buying it and selling against it and betting against Tesla and it goes up, your potential losses, short selling, can be anything. Just like GameStop, this can go as high as it wants to the moon.